This is Dukascopy Webinars. We have a team of expert.
There's one 9-word myth you must absolutely never believe if you ever want to be able to play guitar without thinking.
All right, Doc here from North America. Good morning, good afternoon, and good evening. There we go. And let's lower that volume. Tangled words in the middle of the week. Happy to hump day. I just saw a friend posted something on like the Facebook. It said something like I picked up I got an extra day or a day off this week because I just thought today was Tuesday. And for some of you, it's already Thursday. All right, let's check it all out. Let's go to. Let me put my glasses on. There it is. And let's put the. Where is it at? That is that. That's that. Let's get rid of that. Let's just open this up. There we go. Let's take a look at the Forex. Let's take a look at the Swiss. Swiss is still in a daily sell. I noticed earlier. Let's find it over here on Forex. You can see we were looking at the using the bond chart there yesterday because markets were a little concerned about the interest rates, and that seemed to be. It's always fun to see fundamentals have some effect on a marketplace. It's so rare nowadays to see that. But yeah, they were pushing it down. So I was watching the bond off of the Dukascopy J4X. All right, and let's put. Oh, let's do that. There, the dollar index is there again. So let's take a look at that. As you can see here, now this is the ETF. We should give it a refresh. Nothing particular. It's still okay. Yeah, what did they do? They lifted. That's the 8th. So here comes. Should be the 9th there. And it's still not showing us the 9th. Let me just double check what the setting is on that. It's got the pre-market in there, so they just haven't made a trade yet. So it's not really reflecting anything more than it went into a daily sell yesterday, which obviously the Swiss franc versus the dollar is confirming that to start off with right there. Now let's just take a look at it on J4X. We just did. Now let's take a look at it on, where is it at? Right there. There we go. You can see that pressure is on the downs. Excuse me, on the downside. Let's make that a little bit visible for you all. As you can see there, it's on the downside. The only thing that has been keeping my eye on is that weekly is slowly trying to stay up in the plus zone. It's trying to get there. Let's put it that way. It's in a minus still, but it's still playing with it, which is curious when I see this action here going on. Whereas some of the other products we're seeing doing a lot even more aggressiveness. I think the euro is still acting like it's trying to drop underneath. Let's take a look at that. Or is underneath. I think it is underneath. No, it's not. Okay. So it got much more closer yesterday. This pop up here in the last few hours has brought it to life. I think it was last night when I was, after doing the charts and just looking through stuff after the U.S. markets were closed and so forth, I noticed that the euro was flirting with it, but now we're seeing this. Matter of fact, I think it was getting very close. It was, matter of fact, it was under. The weekly was under for a little bit, and then it's popped up again. You can see that buying coming in, which means basically this is like the scrimmage line, or in touch versus out of touch, for people who follow sports outside the United States. Sometimes you can call it. You can call it like supply and demand, or buyers versus sellers. But I think the best description of our math is in touch or out of touch. In other words, inbounds or out of bounds. You know, it's a line that's physical, it's defined. When you say overbought or oversold to a lot of people, everybody has different rules. You know, they have different ideas, what's overbought, what's oversold. You know, it's a conjecture type of train of thought. It's not necessarily a physical description. You know, sometimes they'll say, okay, you know, looking at the stochastic or this or that, you know, other indicators, they'll say, okay, this is trying to tell us that it's overbought or oversold. And the key word there is it's trying to tell us. But in Doc's math, we have a very defined line. In other words, when you're watching English football or global football, soccer, as we call it here in the States, or if you're watching Australian, football or any of that, the in touch and out of touch, or the inbounds and out of bounds, does not change. It's fixed. You're not going to go to a stadium during a game and they go, wait a minute, wasn't that flag like 2 feet over last game? No, the definitive structure of the field is there. And sometimes I've tried to describe this that exact way, that it's in touch or it's out of touch. It's one or the other. And so that's how our math really works. It's very defined. It's very rare that there's a conjecture. And the only conjecture is that did they touch the ball inbounds or out of bounds, or in touch or out of touch? That type of thing. And that's what the red and green dots try to do. They try to fight the referee. That's what they do. They fight the referee. Where they have to go play a recording of the match, of that particular play, and see if they can find out did they touch the ball or didn't they touch the ball? Was it inbounds? Was it out of bounds? Or in this case, was he offsides or was he not offsides? That type of thing. That's what the red and green dots do. But everything else is very fixed. It's like, if it's below the histogram, if the histogram is minus, then it's basically, unless it's a super gas line, where we're running 2 different gas lines on the same chart, it's that way all the time. And even then it's defined the same way too. It has the same fixed definition. So, anyway, that's the little lecture of that. Ooh, do we have something there? Nope. I thought for a minute we had a chat, but no chat. So now, where do we go from here? We go over to, let's see, go like that. There we are. We go over to, that's the euro. Let's go to the British pound. Let's see what they're doing there. There it is right there. And you can see here, British pound is fighting to fall into the out of touch, I guess you could say, right there, where the sellers are greater than the buyers. Now let's give that a quick refresh. And sure enough, it's still below the zero line by the hair of its chinny chin chin. And that is what's going on there. Let's see what else we have to say about any of that. Not much more than that. And I guess we could talk about how the white line is trying to pierce the top of the time manifold. And this is flirting with the daily sell. And we got a volatility indication of a red and a green. So it's all good warnings that something's going on. Yeah, I guess that's about it. That's the best way to describe that. In touch or out of touch? So now we drift over to Turkish lira, which did go into a daily sell there yesterday, and and it did it also in the euro against the Turkish lira. And you can see right there, it's sliding down right in there, showing its weakness. And the same thing when we go all the way down to the Turkish lira euro pairs trade. Same situation. And that pressure is on. You see that? Our red line should be over here. So we'll put that red line in there. Let's take a look at it on J4X, just so we can compare the how well they do work together. Our public indicator that we use on J4X and how it matches up. Now that is, let's see where we're at. That is the Euro Turk. So let's go take a look at Euro Turk on J4X. Right there. And we're just going to highlight that again like that as it fills in. See how the white line has been pressing down over in here. See, it's a good tool. It's a really good tool we have there. I'm not much of a what do they call this? The MACD. But when it comes to looking at two different RSIs trying to compete against each other, they are almost 70% accurate to our math, and that's a pretty high percentage. You know, you want something like that, and at the same time, you know, it is very indicative. So it just shows you how much the lagging indicator of the MACD is when taking two supposed lagging indicators and competing against each other. It's classic, you know, relative, you know, and it's got nothing to do with marrying family members. You know, it's definitely relative to one to the other. And so let's see, let's go on to, so we go from here, we go to Canadian. So let's see what the Canadian is up to. It is doing what we normally see when the Turkish lira is moving one way. It seems to be joining in. You know, see how it's plus now for the last couple of days. It tries to go in. It's trapped inside this big box that we've been watching for a month now, or 30 days almost. You know, you can see here the weekly is very, very close to trying to climb through. Let's see what that looks like on J4X. Dollar CAD. Bingo. And you can see here that's been doing the same thing, holding up very well. It's a really good tool here. That's why we have it on J4X. We're able to show that. Doc was tasked with trying to find something to put on J4X that would show as a good indicator. I tasked myself to do that. You know, I wanted to be able to show you that we can take something as sophisticated as my work and come close to putting together a couple of public indicators. Now, we have a couple of people who watch the webinars and the videos that are big MACD fans. So we put the MACD in there to just show you something that's defined as a leading indicator and how poorly it acts to it. It's not compared to the others. All right, from there, it's been a quiet day. No one's asking any questions, so we're just marching along. We're going to jump over to the, from there, when we look at CAD, we think of the energy complex. And due to the fact that this thing is in a weekly cell, still, even by its teeth, you know, it really thinned, you know, it just shows us. And at the same time, it's confused because it's in a daily buy. And here we are in a weekly sell, so it's a neutral position. Then we've got this big, long box rectangle that's showing us how tight the market has been, going nowhere in direction. And we go over to the, where's that? Right there. We go over to the oil market. We always like to look at the oil market, and some have asked us to look at the gold market too. And you can see here it's holding up very firm. You know, we slipped into a sell, then we went back into a buy right in here, and now you can't see that. Let's go over to there. There we go. You can see now we're back into the buy again, and this is holding up in a weekly buy for a second full week, going on a third week as we speak. It's 3 full weeks if it closes like this. It doesn't look like it's going to really, unless they really take this thing down and take out maybe these lows or that low there, chances of the weekly going into a weekly sell are still slim. I think it might have to take the lows out there. I mean, and I don't think we're going to see any action like that. And so you can see the strength in the oil market is holding up. I keep on hearing people talk about things like, you know, $75 oil. You know, that's no problem. This product can move $4 in a day. That's a norm for this product. It's not an abnormal day for this product to go $4 or $3. It has a volatility. When you're the, you know, when you're one of the most globally traded products in the world and is needed, and I think there's like 100 and some odd million barrels a day transacted, and used, not transacted, used. So, you know, there could be as much as 200 million barrels a day. That's a lot. And, you know, just think of a barrel at $75, and you're talking about 200 million of them, you know, basically with use of maybe 125, 130 million, something like that a day. You know, you're talking about some real demand. You know, so it should be volatile, and it's not. think about this. It's a physical demand. So it's not like, currencies, it's a physical demand, but they're electronically moved from one place to another. That's nothing. Try to move 150 or 120 or 130 million barrels of oil in a day. You have to move it physically. It's being used. It's going into refineries, it's coming off trucks and barges, it's going into giant machines or factories and being refined. I just, saw one of those great statistics where it says something like almost 40% of the barrel of oil is used for gasoline to power automobiles, and like 37% of the barrel is used to process airplane fuel and so forth, and then like another 20 some odd percent is for petrochemicals, for the plastics and everything else we use for petrochemicals every day out of a barrel. Which is really cool. And so when you're talking about moving a physical, in a world where we're used to QE now, we're in the QE era. I'm probably one of the only human beings in the financial markets who have as much credentials of being a trader for 40 some odd years, who constantly beats that drum. We're in the QE era, and a lot of people like to try to pretend that it doesn't exist, when in fact the central banks are putting $120 billion a month in, if not more. The Federal Reserve alone is doing $120 billion a month. Who knows what they're rolling every day? We have no idea. That's new money coming in. We don't even know what they're rolling every day. They could be, at this point, they could be half the market, if not 3/4 of the market of every trade. Let's put it this way. The central banks in this world are at least 30% of every trade. I don't care if you're talking about Apple. I don't care if you're talking about GameStop. I don't care if you're talking about Microsoft. I don't care if you're talking about oil. I don't care if you're talking about US 30-year bonds, 7-year bonds, boons. They're probably 30%, if not 60% of every trade every day. That's right. They influence that much. And so we are in the QE era. And so when you see oil, I have a point to this ramble here. When you see oil move up and down, $3 or $4 in a day, and everybody gets excited, it's like a 5% move or a 7% move or a 3% move, and they get all excited. They think, oh, this must mean something. It doesn't. It just, it does. It means one thing: supply and demand. You're seeing the actual reality. That's what this whole diatribe of me saying we're in a QE era is all about, is that we're actually physically seeing an object that can't be faked. In other words, it's not like gold or silver or stocks or bonds that are being faked, because they're being controlled by the central banks every day by 30 or 60%. And even oil is probably being influenced on some esoteric way through a synthetic bond. But the majority of oil, more than any other product, is truly physical, something that we rarely see anymore. Those, pretty much in the QE era, central banks create, artificial gold, they create artificial silver, they create artificial bonds, they create all kinds of artificial things, because they are controlling those markets enormously. But when it comes to oil, they can't create paper oil. There is no such thing as paper oil, because when that refinery needs to distill and produce, 41% automobile fuel, if they don't, next thing you know, you're going to see a 7-8% jump in a day at the price at the pumps. Same thing with the airplane costs. Same thing with the petrochemicals. So this is truly, this product in particular has its own volatility nature. Oil is truly has its own VIX. It really does, and people don't always understand that, and that's important to talk about. So that's how we ended up on this little diatribe about this is the last of the frontier of actual physical delivery of something that's not cannot be faked. It cannot be faked, or you'll see it at the pumps instantaneously almost, which is really cool to actually see something like that happen physically. You know, how rare is that to actually have something that you can say, oh wow, look at that. That's there's a shortage in that market. Look at the way it is exploding, and that follow through could literally end in 7 hours. Whereas normally when you see 7 and 8% moves in other products, the central banks and the Federal Reserve come rushing in and squelch it. They don't even allow it to get that far. So that is the reason why I'm playing this one up right now. No one's asking any questions, and so Doc's mind is allowed to roam. And that's that. When we look at oil, it's always fascinating to see those moves in the market. So when someone tries to go out there allegedly on the limb, like, oh, that might mean it's going to 75, it's like, yeah, all right, you want to make a bet with Doc? How many times I've made such a big win on bets on the trading floors where people say to me, well, if it could go to this, and I'll go like, oh yeah, I'll bet. My math turns down and I go, I bet, and I'll give them like this 3-to-1 ratio opportunity to make money, but my math is going to outdo them almost 9 out of 10 times. So I take the bet. I can't tell you how many times I've won bets for $100. Well beyond anything losing it. Trust me. So that is the end of that diatribe, because I think that's always fascinating. When I look at oil, I think of a product that cannot be made a paper product. All right, let's take a look at what we do now. Is we also nowadays, besides looking at natural gas, which is the other energy product. What's going on there? That's today. Yeah. Okay. Yeah. So it's trying to make a little push into the sell here. This morning when we sent these charts out, this thing was deeper. You can see here, it's almost at the high of the bar. Oil was pushing hard down when we sent the charts out this morning, and sure enough, it's trying to lift up. And matter of fact, I can get rid of that also. In the beginning of this week, it was really flirting with the weekly sell. Now, the histogram is higher than last week. On Monday, this thing was flirting with the zero line or out of touch line. Ah, there we go. Hey, Alan, how you doing? And YERB, hey, how you doing, guys, gals? Well, it looks like Alan got blocked out on something. Just try to make it shorter words or something. I guess. I don't know. Was it profanity? Were you advertising something? YouTube blocks that stuff out. Getting more on the bet than on the trade? Nah. I was down there. First of all, I was a journeyman type of trader to begin with, trading. Aggressively trading. I traded volatility more aggressively back then. Because you were on the floor and you could buy the bid and sell the offer. Now the volatility is really tightened up. Now there's not much room to play the volatility. You play volatility now more like the way you trade direction. But no, not that way. But that's a good question. I'm glad you said that. No, I would like the crash of '87. People were like, "Oh, we're going to go back down and test the lows." It's like, no, you know what? We'll be 300 points higher, and I'll bet you $100. That type of thing. So no, but I am very good at the crap table. Because you can offset it. After the first roll of the dice, you can offset it very easily to put yourself into a neutral position or a winning position. So, whereas I enjoy card counting, but I don't do it that much because I have trading. Who needs card counting when you have trading? You don't have to talk to other human beings. That's what's kind of neat about it is you would think that I'm like a chatty Cathy and I'm ready to talk to everybody all the time. It's kind of the webinar, because it's me talking about the marketplace, and I always have a strong opinion about the marketplace, so I really talk a lot about it. But I'm not really that fast to talk about the market overall to people. But here on this webinar, everybody's tuned in because they want to talk about the market. So, that's the whole gist of this. Is it's really nice. In other words, you would think that like I would talk to like neighbors and friends about the market all day long or something. I don't. I don't talk about the market at all. Zero. Because I'm at such a sophisticated level that 9 out of 10 people are not even going to be able to grasp anything that I have to say about the market. Whereas here in the webinar, everybody's interested in the market. But 9 out of 10 people don't care about the market at all in the public, in the communities. They don't pay attention to it. Chat not working properly. Sometimes they block you out if you put like a .com on there, or you put up a website they won't want you to put up, or something like that. So that's part of the challenge there, Alan. But just try to dumb it down on what you're trying to put out. In other words, don't put the .com on there. Just put a slice. Like imagine if you were trying to say something like ChicagoQuantTechnologies.com is great, or Chicago Quant Technologies is worthless. Don't pay attention to .doc. If you put the .com on there, they're going to block it. Now, if you just put Chicago Quant Tech up there, they're not going to block that. So, you just create what we call that shorthand. You put anything up there as a shorthand. That's how we used to describe it. So, hey, YER, yeah. Let's see. Can you tell tell us what you think for Euro? Well, let's go take a look at it. Sure. I'd love to give you my opinion. I love talking about markets. That's what I can't do it anywhere basically but here. There are no traders around us anymore. I mean, it's not like I have a floor to go to that I can talk about different ideas. So I love doing the webinar for that reason alone. Think about it, really. All you traders out there that are watching this or watching the video, where can you really go to talk about the markets? I mean, really, people don't want to talk to you about the markets. I mean, maybe a few friends that are into day trading or Reddit or something like that, but they don't want to really talk about the markets. They have other things that are interesting. So here's the euro today. At one point, it was flirting with a daily sell, which was kind of cool, The weekly at one point was very close. You see how close it is here. It was actually minus there yesterday. It seems like it's trying to hold up. We're going to go into the buy. I think, how did we, let me just show you what we sent out this morning in our Chicago Quant service. Let's go open it up. No, that's not it. That's the S&P. Where are you? Oh, there it is, right next to it. There we go. Yeah, so we're in a buy going in from yesterday on this. Now, why isn't this one up here? Oh, I see. Yesterday's has a red and green dot. Let's refresh that. Maybe that's gone. That might be literally left from yesterday. Now, for some reason that is there. Let me just double check what that is showing. Okay, I see why. Let's fix that. And this should straighten that out to match our charts that we send out every night. That's why it's important for people, even if we've looked at something, it's important for people to go back and, that have missed what we were talking about, to go back and look at it again. That's why Doc is willing to look at the euro, for 5 or 10 other people who tune in right now. It's important, because of that situation right there alone. I use this particular page right here, the Dukascopy day week Forex chart, out of this, and it's a different color, and it's pretty much matching up to what we send out. Where's it? What we send it out like this. This is dark, but I fine-tune this a little bit more, and so when they don't match up, I go and do something about that, like I'm doing right now for you. And so you can see here, it went into the daily buy yesterday. It's on the fact check spreadsheet too. I think it's on the fact, yeah, right there. Line 14, see? It's on there too because I'm taking it from the other chart. And so, you know, it's 9 weeks in a buy, 1 day in a buy, you know, going on its second day in a buy, and the weekly is finding a way to climb right back up again. Matter of fact, let's take a look at that weekly again. No, that was up at that point. It was yesterday that it was flirting with it, and we had that sitting right there. Matter of fact, we can remove. No, we can't remove that there, but I will remove that off of the next time I send a chart out because it looks like it's lifting back up. So it's testing it, but it's not really doing it. Okay. Oh, what's Alan say? Test message. Okay, there you go. See, that worked, didn't it? Hey, 33, how you doing? Say, hey, Doc. The quants say hold for the FTSE. Do you have any other insight? Let's go look at that. I left that up, hoping that you would come in and ask, because when we sent the charts out this morning, it had not started the trade yet. And let's take a look and see what the ETF is showing. So I left that up. See, it's right there. And there's tags. Now, what is that? That's tags. Let's refresh tags also. I don't know if that's going to show anything, but we'll take a look and see. Now, tags is still showing from yesterday. And let's look at FTSE. Right there, it's still showing from yesterday. Let's also give it a refresh. Let's see if we can interpret what's going on here. It's still showing yesterday, and I have actually done this too. Look at this. I've changed the parameter to 24-hour, or it says with pre and post market now. I'm trying to get it to show any update at all, you know, anything. So far, no go there. You know what we can do too? I've talked to Robin about that. These things that are ETFs, we can send you another copy of it when it finally gets going in 28 minutes. Because this will start trading in 28 minutes. We will see, and we can give you a heads up. So what we'll do is, I believe you are subscribing now? But even if you weren't, I would gladly send one over to everybody. You know, just because of the idea that you're watching it. But what we'll do is contact Robin and say, Robin, can you send us a fresh FTSE? And anybody who's trading, what's the yellow one? JO, like Middle Age. I think Middle Age is trading JO and what's the other symbol? The other ETF. Tags. Tags is a ETF of the four commodities. It's soybeans, corn, wheat, and sugar. Fascinating ETF. And so just send Robin a message and say, can you refresh my my FTSE? And we'll send you a fresh FTSE as soon as it trades, okay? How's that? Let's see, URBZ says, thanks. What you suggesting to identify entry points? You have to be a little bit more elaborate, but what do you mean by that? Let me show you the map. Do you understand our rules? Let me just show you the rules here, the way this works, and then it'll show you the I think I get it. I think I understand your question. Identifying entry points, entry and exits. Okay, so see here, we're using. Let's use. Give us a product that you like to look at. Let me look back at what you were looking at before. Okay, euros. Okay, let me go to the euro. Let's take a look at the euro, and we'll clarify how this works. Where's it at? Let's see, where was it at? What do we got here? This is tags. There is, okay, here it is right here. Okay, so here's the euro. The way it works is this. Right now, let's go all the way to here. Here is the, see this right here? This is the weekly buy. What happened was that, and we're going to emphasize each one of these things. So this is the rules to our math. Okay, see how the white line, or the histogram in this case here, is plot 4 and plot 1. See how they're plus? So plot 1 is 0.00024, okay? And plot 4 is 0.48. It's a 2 standard deviation of the first. See how it's plus. See how the week before it was minus. And let's show you when it went minus. So it went minus here when the product was trading in the, where's that? It was trading in the look at see the close, 121, 1.2173, okay? And then we closed in a weekly sell and we threw this pink thing in right there, okay? And then you can see obviously the market kind of started to weaken from there and went down. At the same time, we were in a daily sell at the same time right here. And it's the same rule. We'll make that bigger too so you can see it. Whereas the black histogram and the white line were minus. See where it said it was minus 0.00289? And so it was minus, okay? And so that told us that that was the entry point to be short. And then you can see it was a winner, chicken dinner. In other words, we won, okay? And then now let's take a look at it on a weekly basis. I mean a buy signal. Here comes a entry. It shows you the weekly, the daily was in a buy days beforehand right here. The histogram is, matter of fact, we can move that over a little bit more, like right there. Matter of fact, it's really over there. It's like right there. The daily's right there. And it stays in a buy for, I don't know, what, a couple of weeks actually. And then the weekly gives you a signal the following week. And so that's the entry. You can be long. Now, in the same token, we were in a weekly sell and you were in a daily buy in this situation right here. So that tells you to cover your short, but not to get long, okay, when trading hard delta. Now, what is hard delta? It means if you're buying the spot and not hedged, okay? If you're hedged, then you can flirt. Oh, what do we got here? Oh, Herr Baker! Herr Baker! How are you? Can you hear me? Hello? No, I'm doing the webinar.
Oh, I'm sorry.
I'll ring you back after.
Oh.
All right. Okay, so he thought I was out on the farm. Matter of fact, that's a good example there. People know me as a farmer. They don't know me as a trader. I tell people I'm a farmer. It's a lot easier to have a farm and tell people that that's what your real life is all about, is a farm. Because, I mean, who really wants to talk about, who wants to talk to a rocket scientist? Like, really, I mean, they're just going to be, you should see the chicks. They get intimidated when I find out I'm a rocket scientist. They don't even want to talk to me. It's like, oh, come on. Now, if I was a farmer, hell, they think I want a plower. But hell, when I'm telling them I'm a rocket scientist, they just run away. It's like, oh, he's too smart to talk to. But anyway, back to the entry thing. Okay, so there's the entry thing. Now, that's right here because we were in a daily buy, but we were in a weekly sell right in here. You're supposed to go flat. Okay, not long, not short, flat. Now, if you're trading options, you can get away with bull spreads, or you're using binaries, you can use binaries because you have lower risk. But you wait for both the weekly and the daily to join in, and then it's winner, winner, chicken dinner. And we have an 8.5 out of 10 accuracy rate. So, there we go. Helps that? Does that help you, your BZ? Does that help you with entry, identifying entry points? I hope that does. Okay, 33, do that, all right? Just let Robin know that you want me to update anything that's not updated for you. And also, for those traders that trade meets, same situation. Meets don't refresh until like another 20 minutes. So if you guys need refreshes, I can easily do a refresh, all right? Don't worry about it. Forget about it. Hey. I'm from New Jersey, so it's like, hey, forget about it. You know what the mob says about, you know what forget about means in New Jersey? It means like, it's how you do, how you doing? Yeah, I'm doing fine. You know, no one cares. It's like, how you doing? How you doing? It's not supposed to go any deeper than that. It's a New Jersey thing. Anyway, that's me. So I hope your BZ, I hope that all understands. Yes, I understand now. It's the same on lower time frames and intraday. Exactly. In this case here, it's weeklies and dailies. Yeah, so it's based off of dailies and weeklies. So I hope that you, you sound like you're familiar to it. So that's good. I'm really glad. So, all right, where are we at now? If you guys have any questions, fire them out. Because, Doc is willing to look at any. I mean, I swear, if you said to me, "Oh, can you look at euros?" I'd jump right back at it again and try to dissect the euro again and try to figure it out even more. I mean, you could say euro 10 times, and I'll look 10 times trying to figure out something else. Honestly, and you never know. There's the markets are always moving. We have no idea. 10 minutes from now, the euro could be showing, go looking at the weekly again towards a minus again. Who knows? None of us. Nothing is set in stone. You know what I mean? Markets move. They move all the time. They're dynamic. And our math is so sensitive that you just don't know. 40 minutes later, it could be totally the opposite of what we've been looking at. So that's where we're at. Let's see. Alan says the AUD euro stuck by options. AUD, are you looking at the pair trade? AUD euro? Let's take a look at that. We don't have that. Look at that too much. So that's a cool one. There it is, right? Actually, it's the other way around. It's euro AUD. I think we have people watching. Euro AUD. Where's it at? Euro AUD. It's next to NZD. There it is, right there. As a matter of fact, let me just double check the indicator too, just to double check it. Yeah, that's fine. Okay. All right, so you can see here it's actually flirting. The euro AUD is trying to lift up today. Well, actually, look at it. It was in a buy all the way to right here. See, no one's looked at this since like a week and a half ago. So there it went into the sell. But we're in a weekly buy. Look at this thing. It's been in a weekly buy for 2, 3, 4, 5, 6, 7, 8, 9, 10 days, 10 weeks, I'm sorry, 10 weeks now. So we've been in a buy since the, where's it at? So we've been in a weekly buy from the 150, what is that? The 155, almost 156 area, right? Right around in there, 155, 70, 80. And we've gone as high as 158. Let me go back again. 50, almost 56 to over 58. So it's moved up a couple of handles. Now you can see here, we went into the sell here, but you couldn't take the sell. You just couldn't be long anymore. And it fell down from 56 to 54 almost. Then we go back into the daily buy. And boy, is that a winner chicken dinner from the 54.5 area, 55 area. It runs all the way up to 58 before it goes into a sell right here. But look at that. It doesn't really fall down much. And then it goes back into the buy right there. Let's put that on there. There's the buy. That lasts one day and it's a loser. Goes into the sell the next day. Right there. So you can't take the short. You can take a little loss. You give a few dollars up on the win, but you're still way ahead of the curve because you were long from the 54-ish area to the 58-ish area. So you give up a few shekels there, and then where are we at now? It's and you can't go short. All you can do is be flat. Remember, you can't go short here because we're in a weekly buy. So you're not taking a loss. You're just taking a profit. In other words, you don't go short here to lose money because we're in a weekly buy. And then we go into a buy and you get long, and then you lose money right there. And then goes into the short again, and you can't be short. Just gave up a few ticks there. And then what do we got there? Let's just double check that. I think that pushes it in the buy. See that? 0.00040. So it gives you a buy. The next day it starts to go off, and then it falls over on you. And so again, another quick little loss right there, 2 in a row. Ow! Doc loses money on that. Ow! Let's remove that here and put that. Oh wait, loss, buy right there. It's still a winner overall, but there's a loss again. There's 2 in a row, which usually is a warning. When you see action like that, that's kind of trying to tell you that something's coming up on the sell side. And now let's see what happens. It's giving you a buy today, right there. let's see if this becomes the winner chicken dinner right there. And we're going to put that right there because until it closes at the close of the market today, it's not officially in a buy to join in. How's that? Does that all make sense to you? Let's see. Euro. Let's see. It says AUD. Oh, let's go over and check out that. The Aussie pairs trade. That's been real sloppy of late too. That's kind of interesting. So it's in a weekly sell. It's not there. It's been right here. It's in the weekly sell, and it went into, where'd it go into the daily buy? It went into the daily. It's in a sell here, and a daily sell right there. So it did this. It went into the daily. Let's go like this. Went into the daily sell here. Why won't it give me my quote? There we are. So it goes into the daily sell right, not there, right there. And we can, it's this one right here. So we need to put that in there, and we'll remove that. So there it goes. It goes into the daily sell right here. But you can see there's a lot of sloppiness on this because it went into the buy here, and it was a nice win. And then they try to take that money away from you. You get a sell signal here, but you're not taking the short because, again, we're in a weekly buy, so you're just watching it. So you had a chance to make your money here from, where is that? From, excuse me, from 77.47, and it ran to 78.90. So a point and a quarter or something like that. 125, I don't know how you want to describe it. And anywhere's in there, you better take some profits out of it. And then what happens is that you get a sell signal here, but it's not because we're in a weekly buy, so it's, you just let it be. Then it goes again and throws you a daily buy right there, so we throw that in again, like so. And that again turns into a winner for just a day and a half. And then it throws it into a sell again right there. And you can't take the short because, again, we're in a weekly buy. So no loss there again. But notice it's playing with the weekly and then the following week it goes into the sell here. Okay? So you go into the, let's remove that. So it goes into the sell here. There's another winner chicken dinner. Nice sell off the next day. Quick and what they call instant gratification. And then we get a buy signal right there, is it? Yeah, right there. But you can't take it because it's in a sell, so you're not getting long on it. Then it gives you a sell here. That's where you lose money. Right there. Finally, you get a loss out of it after 5 or 6 times. You get a loss there. But at the same token, we are now in a plus again during the trading day or during that week. See, it's been like through the buy signal all week long, so you can't get short right here because we're in a plus, so you have to be flat again. So you're not taking a loss there. Closes in a weekly buy there. Okay. And we're still in a daily sell, and then right here it goes into the daily buy again right there to join in right there. And now it's telling you to get, it's up. You can see yesterday it went into the buy at 77.43. Today it's trading at 77.55. It's making money. Problem is that we are below the weekly sell now again. So you have to be flat. You can't be long and you can't be short. So it's keeping you safe out of all these moves here. And so as a trader, you're trying to take your money and run. Use what we call, Robin calls it, what's the name of it? You call it smart money, being smart money and responsible, signals. In other words, in other words, when you're in a weekly buy and a daily sell, you need to be in a neutral, not long or short. We have clients that do that. They start to challenge the math. Why, I have no idea, but it's a natural tendency. Some people just do. They challenge the math. They end up losing money, and they start to realize that just follow the math. So money management, we call it money. Robin calls it money management. Using the math right and doing the money management. Okay, so Alan says that the Aussie against the dollar, and then he's looking at also the euro against the dollar too. And so let's go back to the euro and take a look at that again. See, the euro is doing that again. You can see it's even getting stronger here. So it's been in a weekly buy now for 2, 3, 4, 5, 6, 7, 8, 9 weeks. And you can see on fact check right there, we are 9 full weeks in a buy on a 10th week now. And you can see that the buy yesterday is making money today from it. So it's a winner chicken dinner. You put your stops in, make sure that you don't give away money that you've made. And you take a little win or a big win. Take your choice. And that's the name of the game. Doc, how about dollar ruble? If the Russian get kicked out of the SWIFT, what happens? Honestly, have you noticed how well it's been doing, but sloppily slow? Not sloppily slow, slow. Let's go over to the euro. I'm sorry, let's look at the Russian ruble. I'm a big fan of the Russian ruble too. Here it is right there. And look at this action. I mean, look at the signals we've been getting out of this. We went into the weekly sell here. Right, there's the weekly signal. And look at it, slowly found a way. It's been in a sell since here. Literally, since back in April 13th, we've been in a daily sell. In a sell. We were like 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 13 days we were in a sell. Maybe 12 days, because look at this, we were underneath it here on the 27th and the 26th, okay? And so then we go into a sell. They try to lift it, but it's still in a sell. And it's a big win out of that. Then they try to lift it up. There's your daily buy. One whole day, back into a sell again. And it's a slow grind down. And it's been in a sell ever since. It tried to lift a little bit, but overall, it's in a sell. We've been in a sell for 2, 3, 4, 5, 6, going on a 7th week. You can see it there on, where is it at? Number 18. So you can see there, 6 weeks in a sell and 5 days in a sell. Matter of fact, in essence, it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, flirted with 15, 16, 17, 18, 19, 20, 21 days. We've been in a sell. Look at this thing. They flirt with buys during the trading days. Sometimes you see that. And it should be there. They're just showing 5 days here. And what a nice move that has been. 2, 3, 4, 5. This is the 6th day. With a warning sign of the red and green. But overall, it's been weeks this thing is in a sell. I think, I'm not sure exactly what's going on there with the ruble. And it's not a big move, but it's a good move, I myself think one day we're going to see the ruble trading in the high 40s. I really do think that's what's going on there. Let's see. Alan says, thank you, Doc. Sorry if I asked a lot. Got excited. Hey, don't worry about it. You're allowed to ask, as I always say, it's cheaper by the dozen. You can ask 11 more questions as far as I'm concerned. I'm willing to look at, when it comes to money and trading, there are no wrong or stupid questions, traders. There are only short answers or long answers. That's all it is. I have no problem talking about any product half a dozen times. It doesn't bother me a bit. So don't be afraid to just look at things and see what's going on. Nothing whatsoever. This is kind of impressing too. Let's look at this product. We've seen where it went into the buy here. We had some really nice moves here. Went into a profit and caught a wonderful move out of it. We really think this product. We really do. And you know what? What's his name? Vladimir Putin. He's basically straightening the fool that we have as president right now. I mean, Biden is a goofball, a kook. And there's no doubt about that Mr. Putin has got a lot of problems, but at the same time he has a lot of successful things he's doing. Now, there's no doubt that the Russian Federation, Mr. Putin is slow at moving some things that are going on there. But overall, Mr. Putin is trying to move that country and countries into better situations. It's just a matter of time. Maybe we're going to see maybe a ruble that goes down into the mid 50s or 60s over the next year. I don't know. We'll see. I think that there's a lot to be said about the Russian Federation, and I really hope that one day things work more for them, for the better than what they are now. And I'm always happy to see the product trades really well. And there's times where they do a lot of things. So to me, I'm a big fan of the Russian Federation. I think that there's a lot to be said about it all. So just hang tight in there, traders. It's a matter of time before they straighten us all out, and we see the Russian Federation moving even more and more into more beneficial ways. And so we just keep it watch it happen. That's all, for the better, not for the worse. I'm not anti-federation as far as I'm concerned. I'd like to see more opportunity and a lot more opportunity of what's been going on. So I hope I've given you. Let's see, leverage is bad for trading ruble. Let's see, the leverage is bad for trading ruble. Right now, it's good actually. They've moved from the 77 area. You can see here. You can see from this whole move here, even when we had to wait for to make a remaining move, it moved from the high, the high sevens or 77.5. We are now seeing it trade all the way down into the 72s and getting ready to move out. Like today, the low is 71.98. So we've moved like 5 handles. That's pretty good. I'm a big fan of one day, in the future, that the federation, the ruble, the Russian Federation, things work better for them. I think that someday we'll see that. It's just a matter of time. That's all. There's a lot of problems, with what they're doing. They're trying. I myself think that things are going to work better for them in the future. Laws are going to change. You're going to see much better situations. Right now, you have a lot of battles of internal fighting going on in the Russian Federation. There's a lot of strange things going on, but we'll see. I look for an opportunity to see the rate of federation of the Russian Let's see how I can try to do this right. Changing the rate of the ret. I can't say it at all. I'm just waiting one day for the ruble to change for the better. That's what I'm trying to say. And the rate of the ret, the rate. It's so hard. Let's put it this way. The rate of the ret. I guess it's the ret of the. I guess the ruble's rate of changing the ret. The ret? I don't know. I can't even. It's all screwed up. I've messed it up. End result is ruble is moving better, and it's fading it lower, and you're seeing ruble going lower and lower in rate. That's what it comes down to in the end. We're seeing it drop, and you're seeing the ruble going from 77.5 now down to 72. That's the end result of it all. And after that, I try to see the fate of the ruble and the mating of it fall. It's tough. It's tough. Because I'm not really reading the way the rate of the ruble itself is failing. it's going lower, which is positive, not negative. And so, it just happens that way sometimes. So you see the ruble rate is drifted from 77.5 down to 72 and dropped even lower to 71.98. So anyway, that's what that's doing there. Sorry about that, traders. I ended up turning it into a disaster when in fact it's a very positive thing we're seeing here. It's becoming lower, and that's a good thing. Anyway, sorry about that. Leverage is bad for trading ruble. Let's see, e.g. euro dollar 120, a dollar ruble 120. No, I don't think we're going to see 120. Nah, I don't think that at all. As a matter of fact, I think it's the opposite. We're going to see 49, 55, 60 something in the end. You're going to see that the ruble will drop and drop and drop more dramatically as time goes on. So I think that we're coming to the end of those 70s and 80s. And we'll just see how that goes. Anyway, we're past the rate of what's going on, and when it comes to the euro, I don't know, the euro, the dollar, the euro dollar pairs trade. I don't see it being. I don't really see. I think it's stuck. I really do. I think the fix, the idle itself, or the euro dollar pair is only going to be more and more sideways. I mean, look at it. Let's go look at the euro, and I'm going to let this all go from here. But look at the ruble. Look at the rate. Look at the way that, to a great extent, for almost a whole month now, it's almost identical to the way that the Canadian is doing. You see the Canadian. Look at this. It's just going sideways, going nowhere. Same thing with the euro against the dollar. I mean, it was touching the dotted dashed line here we have. It's been trading in the what is that? The 122, right? So 121 and 3/4. You can see here it was trading in the 121s, and it's gotten as high as 122.66, kind of hanging around in that area. Do I really think we're going to see 125? I'm not really sure. I think it's going to be like the euro, not the euro, the Canadian, trapped in like a nowhere zone like this. Look at this. It's just really not doing anything at all. So it's going into daily buys and it's going into daily sells, but overall it's been in a weekly buy for over a few months now, since the middle of April. So I don't think there's that much really to be said about it, more than just the fact that that's what it's doing. So let's see, Alan says, not the price of the margin we can use to trade. Right. And the end result is that they're trapped. And the same thing with the dollar. The dollar is kind of trapped in a range. There's not a lot of action really going on there. So as much as everybody says, oh, watch out, the dollar is going to go crashing down or something like that. If there's any product at all that's going to break down, it's probably the ruble and the dollar ruble pairs trade. It's moved from 77.5 down to 72. I mean, out of let me go back to that really quick, and then we'll end the research of it. Where's it at? Right there. There you go. I mean, pretty much it was up in the 77s, 76.5 in that area, and you can see even here, it's come down from the 80s, and now we're almost flirting with the low 72s. So that's like a, what's that, a 12% drop really overall over the last 9 months. And sooner or later, you're going to find it trading in the 60s, unless we see a change. And you can see it's held up dramatically. You can see that there. Anyway, it's like 5 minutes past where I should have been gone by now. All right, traders, we will catch you tomorrow. Same time, same channel. Tomorrow is Thursday, the day before Thanksgiving. The day before TGIF. Doc saying arrivederci. Happy trails to you. Until we meet again. Happy trails to you, to all our trading friends. Arrivederci.